Welcome to Caching Waves. This is an Elliott Wave update for DOGWIFHAT. Now I'm out on a daily and I wanted to show you the path I am currently tracking. And that is that we have a 5-wave impulse from the low. First we made our 5 waves up in green for our first wave 1 in blue. Then had a retracement to the 50 and the 618 of that wave 1. We then had our second wave 1 and 2. Came up and passed the 1.786 for our third wave of the second wave 1 off the 2. We're currently on a fourth wave. I'm going to explain to you what I'm tracking there for an entry and looking for our fifth wave targets between 324 and 413. And if we get extensions, we could come up to the blue 1.618, which is just under $5. But we won't know that until we start tracking. So right now, just targeting 325 just to be on the safer side. That's just for the trade setup, risk reward currently. So we're going to go down to this wave here and analyze this fourth wave in green on the smaller time frames. I'm going to show you my trading strategy for this one. So that third wave I had labeled out, we had 5 waves up, we had an extended fifth wave, and the way that counts out is a wave 1 and 2, a diagonal wave 1 and 2 with a short retrace. We then came up to the 1.618 extension as expected for our third, had a running triangle for our fourth, and our fifth past the 2.618 extension, so quite extended. Then took our wave 1 through 3, projected off the fourth, and we came just past the 1-to-1 extension of that, which is a common target. Okay, this has been the area that's been quite difficult, and I need to explain all the different scenarios. So one thing to consider when we're in this area is we are in a fourth wave. So we have to anticipate what to expect in a fourth wave. Fourth waves likely have running flats or triangles or regular flats, right? Even expanded flats sometimes if we're just going to do a quick stop hunt and then reverse. So I'm going to show you my trading strategy for all of those. So if I have my count correct, which I believe I do, this is our fifth wave top. This is quite bullish looking as a correction in general. We are making higher highs above the fifth, so that's a good sign for the bulls. Now if this is labeled correctly, we had a flat 335 for our W wave. We had a 3-wave move for our X wave. This is my alternative if we get super bullish from here. And we had another expanded flat for our Y wave. And this would be a double 3, flat and a flat. So in that scenario, why I don't like it and why you see it in gray is our ideal guidelines, not rules, is we correct these 5-wave move up between the 618 and the 1-to-1 in time, which is out on Sunday and next Wednesday, somewhere in this zone. And you can see we're still quite far away from that. So it is valid, but I would say improbable currently. But I've seen crazier things happen, but for trading purposes, I don't like to trade improbable, right? So that's one scenario where that was all of our correction right here. And the issue with this wave here is it can be counted multiple different ways. You can also count it as a diagonal where we have a series of 3s. So this can be counted as a 5-wave move or a 3-wave move, which I don't like. It complicates things when you're trying to figure out the right path, right? So my most two common things I think are happening, and in that scenario, where this is the low, this would pop up and most likely become a diagonal series of 3s, right? ABC, ABC, and we'd be looking for an ABC. So in that scenario, what we would look for is obviously a sideways consolidation and then to break the high. And where I'd switch probabilities to that is when we pass the 1.618 extension of this move to the downside here, this A wave. Because then this B wave area would all be invalidated where we'd expect to move to the downside. So my strategy for that although quite improbable, I think. How I would trade that is I would wait for the break of the 1.618 up here, buy the breakout, and if we get this move up, this is if this price action fills out and we get a nice ABC correction, and then we start popping and moving really quick, and it looks like a third wave, you know, volumes coming in, very strong moves. That's where I'd buy this breakout. Stop would go at this level, and I'd calculate my 1% risk based on that triggered order on the breakout and this current stop. Because if I'm correct on this, then we should not come back and revisit this level, right? We're on a wave 3, we should never come back to wave 2 territory. So that's how I trade that scenario if it gets away from me. Again, very improbable. I don't think it's the case, but we have to at least give it, you know, the possibility, because it is there. Now the two I think are most probable now is we make a running flat, which when this correction ends, whenever it ends, we will pull our fib from our W wave off our X. We're pretty much in the ideal zone now between the 1.236 and the 382 of this W wave to the downside. And we will target between the 618 and the 1-to-1. But we need to move down to pull that pivot, right? So I can remove this white one from last video, because this is our new area we will be targeting. So we'll target that 1-to-1 whenever it comes down, the 618 and the 1-to-1. What we would like to see is we interact and just reverse off this channel I have marked here. That would be ideal, and look for a long at this low. So in this scenario, if we get this Y wave to the downside, I'm going to look for an entry as close to this W wave low as I can, and this will be my risk area. My stop will go at this W, and I'll calculate my 1% risk based on where my buy-in entry is here. So that's scenario 2. Scenario 3 is this is all making a running triangle. Remember, we're in a fourth wave. We can get running triangles here. And the longer this drags out, the more likely it is a triangle. So in triangles, we look for zigzags, double zigzags, even triple zigzags. We can get flats, combinations. It can get quite confusing. That's why it's nice to just kind of set a barrier zone. And we'd be looking for 618 retracements. So we'd be looking for a series of 3s, right? Like so. But what's nice is if we get this price move it down here, you can see in the triangle scenario and the Y scenario, we should protect this A wave or W wave low. So I will be buying in this area once we come down no matter what. But my strategy for this is to consider it a Y wave, but knowing that this E wave can happen as well. So how I will max leverage this area, because I'm looking for position size with 1% risk, okay? So let's hypothetically say we get this move down. I buy here, stop is at this low. I then see us come up, right? If we break above this B wave labeled, then I would consider, oh, I guess it's the WXY. If we come out impulsively, right? I can lean into the fact that we had a WXY and we're not making a triangle. So what I would do is buy a couple cents above the B wave, because it should get constrained at least as a barrier triangle. This can also be contracting triangle. We're not sure yet. But if we get the breakout above, you know, same thing with volume, with speed, then what I would do is I already have my entry here. Stop is here. This is $100 risk. I would buy the breakout, and I would calculate the difference of the original position if I move my stop up to here. So I might have an extra $50 capital by raising my stop up to this level. It'll be triggered in, and then my entire risk will be $100 with the stop at this low. So that's how I can pretty much double my position sizes in those areas. But until we break above this level, I wouldn't raise my stop from that Y or C wave, because if we don't break out, remember, we can come back and overlap with this B wave. So we can't consider this a 1-2-1-2 and that we can't come back, because the C wave is possible. So what I would do in this scenario is same thing. I would wait for the, if I got in this area, stops at this low, but we got a D wave and we started coming back, I would wait for the E wave to fill out, and I'd buy the breakout above the D, and then my stop will go here. And this much risk, I'd probably be risked off, where if I had a $10,000 account risking 1%, I'd have a full $100 to throw at it, right? 1% on the breakout with stop moved up to this level. So this is how I strategize in real time, knowing the possible paths. And obviously I have to be watching to get the max position size, because these pivots change, you know, hour by hour as this fills out. Like my stop level changes. Say it's coming down in the E wave, and I'm like, okay, if it reverses, in advance, I put my order at the trigger and I figure out my position size based on that stop. So in advance, this order is sitting there as a triggered order. But if we come down for one more, I have to, and we still protect the C, I have to recalculate again, right? We have, now my stop would have to go here if we break out. So I'm constantly adjusting my trigger orders to maximize the position size here. So this is what I'm looking at for the bullish scenario. There is one more I know you guys are aware of, and that is a expanded flat. And on that scenario, I will get stopped out on this Y or C wave with the stop at this level. And in those scenarios, I watch at, you know, the 1.618 extension area, because I want to see like a V bottom, reclaim some resistance, and potentially buy into a wave 2 with the stop at the low. So I have accepted the fact that expanded flats I just get stopped out of, but it is an opportunity to get even a better entry. So there's no right answer. It's just it's you know, it's pros and cons. Sometimes it's nice for it to actually stop you out, because you can get much larger position size. All right, so that's what I'm looking for: expanded flat, running flat, triangle, and least probable is this is a completed WXY, and this is a 1-2. Least probable though, and the only way I'd enter that is if we pass that 291 at the 1.618, and again, stop would go wherever the wave 2 pivot is. All right, so it looks like we might grind sideways here a little more. Can get one more here to the upside and then make this CDE in that triangle scenario. But either way, I'm looking to buy at this area. If we make it down, stop at this pivot here at around $1. All right, guys, I hope that was helpful. This is how I strategize in real time, and I will see you on the next one.